joining me today for Real Estate, Religion, and You. My name is Dr. Sylvia Black, licensed real estate broker and financial advisor of affordable homes and apartments. And I'm also licensed to preach and ordained as a minister. And I have my master's degree in sacred theological divinity, so I have my PhD in Bible studies. And I want to thank you for joining me today for Real Estate, Religion, and You, which airs every Wednesday, right here on Time Warner Public Access TV Channel 20, Wednesday 6:30 to 7, and Saturday from 12:30 to 1 in the afternoon. You can also visit me, hit me up on Facebook at Dr. Sylvia Black. You can visit my YouTube address or channel at SBlack2001. And you can also visit me on Black Preaching Network. And I have a website that you'll be able to find as soon as possible. And thank you for joining me today for Real Estate, Religion, and You. Now today I'd like to talk to you about a book that I've written. Last week was the working title, and this is again a working title. But it's eloquently entitled Blood-Sucking Banks, and this is the DVD. Okay, but the DVD, the actual book, I'll have it next time when I bring it to you. Let's talk about blood-sucking banks, and basically what it talks about is overdraft fees, how deposits are handled, how to avoid overdraft fees, and what you can do about it when you feel that you've been unjustly charged overdraft fees, basically. Basically, that's what it talks about, the fees that the banks charge today that sort of suck our money dry. Okay. Now today's topic we're going to be talking about is bank fees. That's going to be the title for today's subject. Okay. Now banking and financial industries have changed over the course of the last 30 years or so. Banks don't offer high interest rates on your money like they used to. Instead, they give you sometimes a whopping 0.5% if you're lucky. And that's only if you're a high roller. Banks also charge higher overdraft fees, and it seems as if they're sucking our money dry. Banks don't do business with you because you're a nice person. Banks do business with you to make money off of your money. Okay? And they're doing a pretty good job at it. Banks do business with you and I to make money off of our money. The banking industry is a fee-generated business. Okay, banks predominantly make their monies off of fees and interest that they charge to you and I. One bank may require you to have a larger deposit to avoid a monthly maintenance fee, while yet another bank may require only small deposits with little or no penalty. I'm a recent employee of one of the banks that I talk about in my book, Blood-Sucking Banks. Okay, a former employee, I should say. Okay, let me change that to former. Okay. I am a former employee of one of the banks that I talk about in here. I've also worked for third-party companies where we answer the phone as if we were the bank. These third-party companies were outsourced by the bank, and we would handle the customer service. Just recently, I was let go from one of these banks, and it was clearly evident that I was overqualified for the job, but a girl's got to do what a girl's got to do. I also worked as a loan officer in New Jersey, and as you know, I'm a licensed real estate broker and financial advisor of affordable homes and apartments. Once I go full-time in my own business, I will be pursuing a mortgage broker's license and an insurance license to complement my broker's license. Okay, so we'll be sort of like a one-stop shopping. Okay. Now, I don't know if you were old enough to remember when the saying used to go, commercial banks are for businesses, savings banks are for people. Okay, that's because commercial banks charge higher interest rates. They cater to the larger balance of businesses, industry, and people. Savings banks charge lower interest rates, and they cater to the low to moderate income individuals and families. Savings banks are just that, a place where you save your money. They also offer checking accounts, but they're not fee generated as much as commercial banks are. Commercial banks more hurt the little guy than they hurt the big guy because commercial banks are geared towards people and businesses with larger balances. Okay, I had an account with a savings bank and it was bought out by another bank, which I would consider to be a commercial bank, which it is really. I can't compete with these fees that these banks charge. Some banks charge higher interest rates than others. Some have different types of accounts, and not every bank is the same, and that's what I try to tell my customers when they're trying to get approved for a loan. Okay, I also encourage my customers to take at least 24 hours to think about anything that is offered to you so that you can read the fine print and ask as many questions as you can to determine what's right for you. I used to try to balance my money down to the penny and never could and still can't now. I mean, I didn't understand how my money was processed, and that was where it got confusing. Banks also changed the way they process deposits. And again, every bank is different. No two banks share the exact same process when handling a customer's money. As a real estate broker, selling a house is contingent on finding a financial product that will fit my buyer. And as a loan officer, that's what I had to do. I researched the market and found products that would match my buyer's needs. And even today, when you're seeking financing or desiring to open up an account, it's extremely important to understand how much that is going to cost you. Okay? It's important to find out how much it's going to cost you. You know, when you go into a bank and they promote, oh, we got this loan for you. You know, we're going to open up this account and we offer overdraft protection. Well, overdraft protection is not an armor suit. Okay, and a lot of times when you hear overdraft protection, you're thinking, wow, this is going to protect me as a buyer, as a customer. I'm going to be protected. I do have to admit it's not always the bank's fault either, because a lot of times we spend foolishly. You know, you forget, and they don't tell you. They said, yes, there is a fee associated with it. But unless you ask them specifically how much of a fee it is, you're not going to find out. So the next time you go into the bank and whatnot, and they promote you to ask you, do you want to open up an account? Tell me, what is it all about? And they'll explain it to you. We offer overdraft protection, blah, 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 and then they say for an agreed upon fee. And then your next question is, how much is that fee? You know what I mean? Now, in some cases, the bank that I used to work for just recently, what they had was something called Smart Pay. And that was even if you opted out of overdraft, because you are supposed to opt out. Legally, banks cannot force you to opt in. Okay, but this particular bank, you opted out of overdraft protection. But in some cases, at the bank's discretion, they would still pay ATM fees and everyday transaction deposits for you. And then you would be hit with all of these fees once again. Now, bank fees are assessed to customers for various services and as penalties. They are unauthorized overdraft fees, ATM usage fees, and fees for having an account balance under a required amount. Some banks charge a fee for using tellers in an effort to encourage customers to use automated services instead. Some banks charge fees for using the automated system too much, or for calling the customer service and speaking to a live person too many times. If you request your balance at an ATM machine, you will be charged an inquiry fee. If you use the bank's money, you will be charged an overdraft fee, and that could result in $39. Across the board, it's supposed to be an average of, I'll say, $28, $27. But some banks charge an exorbitant fee, way up in the 60s. Okay? If you bounce a check, you will pay an NSF fee, insufficient fund fee. And the list just goes on and on and on. Okay? Now, the fees have come in for criticism as excessive from consumer advocates. They have also targeted bank practices that maximize the assessment of fees, and fees that can add up to many times the amount of small transactions. For example, you deposit, you are down to your last $20, right? You write 3 checks, all equaling more than 20, right? And you're going to get hit with $39 for each one of those transactions, depending on what state you live in. But the fee doesn't change very much. 35, 39, 32, okay? Something like that. Maybe 27, depending if you're in a southern state or not. And you could pay as much as $64 for an overdraft fee. And that's what they call usury, and I'm talking about that in my book also. Now, you will be charged this fee for using the bank's money if you opted in, okay? You might say, look, I want to opt out. A lot of people don't know that you can opt out of overdraft. Look, I don't want overdraft protection. Count me out. But at the bank's discretion, they will still pay ATM and everyday debit transactions, even though you've opted out. Okay, so hence, what does that mean? You're going to pay a fee. Now, nobody should be writing a check if you don't have any money in the bank. But if you use your debit card and you swipe that and there's no money there, the transaction is not going to go through. Okay? You're going to get hit with $39 for each one of those transactions. And if you don't pay those, let's say 39 times 3, because you, hypothetically in this situation, you've made 3 transactions. So now you've got, let's make it even, $40, $120, right? Now if you don't put your money back, if you don't pay the bank back those that $120 within 5 days, you'll now get charged an recurring overdraft fee of about $28.50 or so, depending on what state you're in. Okay, and every 5 days that you don't pay it back, you get hit with another $28.50. Okay, and I'm going to talk about something that I think that you'll find very interesting. Now, U.S. banks extract fees from automatic teller machine transactions. Okay, they are made at rival banks, even in the customer's home bank, at no branch in a particular area, such as when the customer is on vacation. Customers are sometimes charged twice, both by the bank that owns the ATM and again by their own bank, where they bank at. Charges, they also charge a denial fee. I mean, literally a fee for refusing service to the customer. If there are insufficient funds on a daily limit, or a fee to simply check the account balance at a foreign or other bank's ATM. Now, following the 2008 financial crisis and legislation passed by Congress, banks have modified many credit card and agreements with customers, sometimes increasing interest rates or reducing credit limits. Now, what is an overdraft? An overdraft occurs when money is withdrawn from a bank or account and the available balance goes below zero. In this situation, the account is said to be overdrawn. If there is a prior agreement with the account provider, the bank, the blood-sucking bank, I should say, okay, for an overdraft, and the amount overdrawn is within the authorized overdraft, okay, overdraft limit, then interest is normally charged at the agreed rate. If a negative balance exceeds the agreed terms, then additional fees may be charged to higher interest rates may apply. Now, in this case, let's say you have overdraft protection, and I'll talk about what that is, but you've also overdrafted, okay? Now, there's only a certain limit that certain banks will actually advance you, and I call it a payday loan. That's basically what it is, okay? And from what I've studied, the amount that the bank will advance you in terms of overdraft protection is based on your average deposits on a monthly basis. I've noticed that when I would look at people's accounts and people would call up, they would literally be in tears, But then I looked at the transactions and I said they were spending foolishly, Instead of you just, those overdraft fees, I don't mind. I'll pay a $39 fee if my rent is due. And I have to pay my rent and I know I don't have enough money in the bank or I've spent my money for whatever reason, and we all do it. So don't beat yourself up about it. It's not like we're rolling in money or the money grows on trees. Okay? Because when the banks finish sucking your money dry from these blood-sucking banks, you don't have hardly much money anyway to spend, and furthermore, none of us are making, minimum wages went up. Finally minimum wage is going up. I remember when I was younger, minimum wage stayed at the same amount for years. And now certain employers are still trying to pay that. You by law, you are required to pay at least minimum wage. And a lot of employers are laying people off because they can't afford to pay minimum wage now. Well, whose fault is that? That's not my fault. I need to make my money. How am I going to earn a living off of the little bit of money that you're paying me an hour? And then on top of that, you're going to work, sweat, you're going to sweat blood and tears. You're going to work. Some of y'all clean out toilets. Some of you lift heavy debris. Some of you stand up all day long. Some of you sit behind a desk and work. But whatever work you do, you work hard at it. And I would assume that you're doing the best that you can do at the job that you do. And $39 for some people is a full day's pay if you work part-time. Okay, if you work full-time, that's more than a half a day's pay. Because remember, Uncle Sam is going to get his off the top. Okay? These blood-sucking banks, honey, let me tell you how you can overcome that. There are ways that you can get a copy of my book, and all of the details will be right there at your fingertips. Okay? And as we go through this the next couple of weeks, I will tell you. When I was working for the bank, I had already started writing a book before I stopped working for them. I was going to try to be nice and say how to keep banks from sucking your money dry. Because every time I talked to a customer and I would hear them in tears, they want their money. Yes, the bank is charging you this, and they don't tell you everything that's involved. They don't tell you the amount of fees that you're going to be charged. They don't tell you a recurring overdraft fee that you're going to be charged. Okay, let's take a hypothetical situation. You get $1,000, right? And I'm going to talk about how balances or how deposits are handled on another. So let's just go ahead on. But overdraft basically occurs when you write a check when you write a check and there's no money in the account. Now you write a check based on ABC Bank. Now you send it to XYZ Bank. You send it to XYZ Merchant or XYZ Landlord to pay your rent, right? Now ABC Bank is going to charge you a fee, right, because you overdrafted, and then your landlord is going to also, in some cases, most merchants do, they charge an overdraft fee. So you're going to get hit twice for that insufficient fund fee. That means that you don't have enough money in the account to cover it. And this is supposed to be a penalty to teach you a lesson about don't write bad checks. Okay? First of all, if you had to suck me dry from the fees that you were charging me, I'd have enough money to pay my bills. Okay? The other thing is overdraft fees. Okay? Overdraft fees. Now, what is that? Let's say, for example, okay, you write a check. You have $2 in the bank, right? And you write 5 checks. No matter how much money it is, you write 5 checks. Okay? And 5 checks are written, you're going to get charged 5 fees. If you use a penny of the bank's money, you're going to pay $39 or whatever the fee is in your state for that transaction. If you're going to swipe your card for a $5 video and that transaction goes through, you're going to pay $39. Okay? If you go buy McDonald's, a $2 meal or $10 meal at McDonald's, swipe, you're going to pay $39. Okay? A lot of people don't think big, they think small. So they go to the small merchants and they buy. The actual fee itself is far over exceeds the actual amount of the purchase. So me, I'm going to go to the bank and I'm going to see if I can get me $100. Or $500 out the bank. I'm going to take the money out the bank, be charged 1 overdraft fee, and then use the money to pay my bill. That's the way you're supposed to do that. You know, you say, okay, well, you give me overdraft protection. If I have overdraft, if I've opted in for overdraft protection, then you by law are supposed to tell me how much I'm allowed, how much money I have available to me. People don't ask that because they think that the bank don't know what they're doing, and all of a sudden you swipe your card and they're giving away free money. Oh, wow, I know I didn't have enough money in the bank to cover that transaction, but I swiped my card and I got my meal anyway. Oh, well, let me go and see if I can get this one too. And meanwhile, you're going and you're getting smaller purchases, small things. And these small things are adding up. You buy 5 things, you're going to pay 5 overdraft fees for a penny of the bank's money. For that $5 video, you're paying $46. You could have took the family out for an evening. Okay, y'all could have went to, but that was back in the day when when Movieland was open. You could take your whole family to a movie, but now you got to do it. You got to get a matinee. $40, I don't know. I think you can still go out to dinner. You can get a Happy Meal for the 2 kids, and a meal for the adults, and then probably that might be it. But then, or you can go to the movies or what have you. But you could have done something for yourself and had a good time at it. You know, there's a whole lot of things you could have done with that $40 other than give it to the bank. You know, we're literally paying salaries when we give the bank our money, you know, and paying fees. And it's ridiculous that they're charging, and they're not saying nothing. They're saying, here's the rope. See if you will hang yourself. When you sign that contract and you don't read those disclosures and you don't ask the proper questions, they're saying, here's a rope. You know, I know 9 times out of 10 you're going to hang yourself with it. You know, but you're going to pay me my fee. And if you don't pay me my fee, then the collection agency is going to come after you and mess up your credit. Well, I tell them, hey, you want to mess up my credit? Ooh, you're scaring me. Ooh, I'm so scared. Stand in line and wait. You know what I mean? Because ain't no thing but a chicken wing. Now, the history of that is that the first overdraft facility was set up in 1728 by a Royal Bank of Scotland. The merchant William Hogg, Hogg, does that sound familiar? Was having problems in balancing his books and was able to come up with an agreement with the newly established bank that allowed him to withdraw money from empty account to pay his debts before he received his payments. He was thus the first recipient of cash credit from a bank in the world. Within decades, the advantages of this system, both for consumers and banks, became apparent, and banks across the United Kingdom adopted the innovative into service. With the onset of industrialization, new businesses needed an easy form of credit to jumpstart their activities without having to take out loans or securities they didn't necessarily have. The importance of this new financial innovative was recognized by philosopher David Hume, who described it in one of his essays as one of the most ingenious ideas that has been executed in commerce. Now, overdraft occurs for various amounts of reasons. They may include an intentional loan. The account holder finds himself short of money and knowingly makes an insufficient funds debit. He accepts the associated fees and covers the overdraft with his next deposit. Or failure to maintain an accurate account register. Banks or ATMs may allow cash withdrawals despite insufficient availability of funds. Okay? The account holder may or may not be aware of this fact at the time of the withdrawal. If the ATM is unable to communicate with the cardholder's bank, it may automatically authorize a withdrawal based on the limits present by the authorizing network. Overdraft fees occur when there's a temporary deposit hold on your account, on your check. A deposit made to the account can be placed on hold by the bank for any number of days. This may be due to Regulation CC, which governs the placement of holds on deposited checks, or due to individual bank policies. The funds may not be available immediately and lead to overdraft fees. I think some banks unnecessarily hold your money. Now, the bank I used to work for, they would take money, you would deposit money in the ATM machine, cash in the ATM, and you'd have to wait till the next business day to get your money, or maybe the next 2 business days. But at another bank, you could deposit cash in the ATM and your money's available right away. You see what I'm saying? That's why I said different banks have different qualifying criteria. Now, overdraft fees also occur when there's unexpected electronic withdrawals. At some point in the past, the account holder may have authorized electronic withdrawals by business, and you may have forgotten all about that. You may have bills that are on automatic debit, or what we call ACH transactions. Now, this could occur in good faith of both parties if the electronic withdrawal in question is made legally possible by terms of the contract, such as the initiation of a recurring service following a free trial period. The debit could also have been made as a result of a wage garnishment, an offset claim for taxing agency or credit account, or overdraft with another account with the same bank, or a direct deposit chargeback in order to recover an overpayment. Okay? Overdrafts occurs due to merchant errors. Sometimes the banks make errors. Okay? And then they charge an overdraft fee. What do? They may refund you those overdraft charges. But what happens to your money? Now your account is all screwed up. Okay? A merchant may improperly debit a customer's account due to a human error. For example, a customer may authorize a $5 purchase, which may post to the account for $500. The customer has the option to recover those funds through chargeback to the merchant. Okay? Chargeback to a merchant account could receive a chargeback because of making an improper credit or debit card charge to a customer, or customers making an unauthorized credit or debit card charge to someone else's account in order to pay for goods services from the merchant. It is possible for the chargeback and associated fee to cause an overdraft or leave insufficient funds to cover a subsequent withdrawal or debit from the merchant's account that received the chargeback. Okay, overdraft occurs through authorization holds. When a customer makes a purchase using a debit card without using his PIN, the transaction is treated as a credit transaction. The funds are placed on hold in their customer's account, reducing the customer's available balance. However, the merchant doesn't receive the funds until he processes the transaction batch for the period during which the customer's purchase was made. Banks do not hold these funds, and they're not supposed to hold these funds indefinitely. And so the bank may release the hold before the merchant collects the funds, thus making these funds available again. If the customer spends these funds, then barring an interim deposit, the account will overdraw when the merchant collects the original purchase. You see, all of these things, you have to really, really look at. Now, the bank overdraft also occurs because the bank charges an unexpected fee. And that's what 90% of the calls were as a result of either transaction disputes, balance inquiries, or fees that were charged. Okay, and at first I had said, no, I'm not going to refund anything. That was my philosophy. But then I decided, I said, you know what, if it's at my discretion, then I'll credit you. But it wasn't as simple as that. And they didn't make it clear that you have to go through the procedure. This is a must. They said this is the way that you see if the person qualifies for the loan. They didn't say that you have to go about doing it this way. When the computer just simply lets you click a button and you can just go ahead on and give them credit for that overdraft. Yes, my brothers and sisters, you can call the bank's customer service department and ask them to refund one or more of those overdraft charges, especially if it was a bank error. There should be no reason for you to have to call if in fact there was a bank error, but sometimes you will have to do that. There are ways that you can get a text message or an email message on your account to let you know whenever a transaction takes place. Okay, and we're going to talk about other alternative financial solutions to doing business with banks. Oh yeah, this is going to be a hot topic. And today I've been talking to you about blood-sucking banks. How banks are sucking our money dry in overdraft fees and all other kind of fees. They're holding our checks and our transactions unnecessarily, okay, and causing our bank accounts to overdraft, and pretty much you're paying the bank salary. Okay, we're going to continue next week with some more reasons why overdraft occurs. Okay, and then we're going to go into some more juicy stuff. Okay, there's a whole lot of reasons why your overdrafts occur. Okay, we're going to talk a lot about overdrafts, and then we're going to get into how transactions are handled. Okay, we're going to talk about bounce protection plans, transaction processing order, how transactions are processed. We're going to go into how you can fight back to these blood-sucking banks to get your money back. What action can you take as an individual that you think that you are being overcharged for these bank fees? Okay, we're going to talk about that. We're going to talk about posting. Like I said, how transactions are posted, how they are handled. Okay, we're going to talk about ways that you can avoid overdraft fees. Okay, there's a whole lot of ways that you can avoid these overdraft fees. Okay, and just to give you an idea, to help you understand some of the terminology that's used in the banking industry. Because let me tell you, honey, they're not going to tell you. Like they used to say, lawyers have lawyers working hard on their side, and so should you. So I want to thank you for joining me today for Real Estate, Religion, and You, and I ask you to join me again next week, right here on Time Warner Public Access TV Channel 20, Wednesdays 6:30 to 7, and Saturdays from 12:30 to 1 in the afternoon. And I've been talking about my new book, Blood Sucking Banks. And I will have the actual book next time. This is a DVD, and I have the actual book so that I can show you what it looks like. And I will show you my book, Blood Sucking Banks. It's available on Lulu.com and Amazon.com, y'all. Oh yeah, you're going to be able to get it. And it's very interesting. You need a copy of this, especially if you feel like you have to take action against the bank who's sucking you dry. So holla at the sister. I'll see you next week. Peace out.